Sheila Barrera with the Investing News Network, and here with me today is Alex Laugharne, Principal Consultant at CRU Group. Alex, thank you so much for joining us today.
No problem at all.
All right, so we are at day 3 here at PDAC in Toronto. How are you finding the conference? Are investors interested in battery metals?
Oh, for sure. Yeah, I think it's interesting. I've been here 3 years on the row, I suppose, and the way in which, particularly when you see all the stands down in the investor exchange, the different commodities being represented often changes reflecting what seems to be hot at the time, and battery metals were reasonably represented last year, but this year it seems to be pretty big. There's a lot of lithium producers, a lot of graphite people, cobalt, all down there.
All right, that's great. And tomorrow you're going to be giving a presentation about the demand of electric cars and the demand of the different battery metals that are involved in that. Can you give us a brief overview of what is your forecast for electric cars?
Sure thing. So yeah, the presentation I'll be giving tomorrow sort of builds up how CRU is forecasting electric vehicles, how that translates into demand for different battery metals, and then looks at a relatively high level at the supply-demand situation in 3 of the key battery metals, lithium, cobalt and nickel. If I had more time, I'd also talk about manganese and graphite, because we've got a little bit of coverage there as well, but I can't talk for too long. And then look at some of the challenging supply and demand situations, because there's supply bottlenecks in all 3 that are quite interesting to look at.
All right. And do you have a particular number in terms of forecast for electric cars demand?
Sure. So the forecast for EVs at the moment is, I think it's around, by 2025, we're expecting there to be around, let's get this right, I think it's about 7.5 million electric vehicles, of which the split is favouring full battery electric vehicles over plug-in hybrid electric vehicles, and then again over mild hybrids like your conventional Toyota Prius that's on the road now. And that breakdown is quite important because the battery capacity in a full battery electric vehicle is substantially larger than in a plug-in hybrid, which in turn is much bigger than in a mild hybrid. And the proportion of battery materials that you need in those batteries is roughly proportional to the battery capacity. So you could say that a Tesla with, say, the Tesla Model 3, I think you can either get the 50 kilowatt hour battery or a 75 kilowatt hour battery. A Nissan Leaf, a different very popular battery electric vehicle, I think it's about 36 kilowatt hours. So that's just within the higher end segment of battery electric vehicles. The Tesla will need more of those individual materials. And I think one thing, an area to watch as development is China is obviously a hugely important influence on the demand for EVs, and a significant driver of our EV forecast is the ongoing policy in China and the quota system that's encouraging car manufacturers within China to up their output of EVs to as much as 12% in the next few years. But within China there is a smaller subcategory of full battery electric vehicles, but that are much smaller, little sort of tiny runarounds, much cheaper, and it's whether Chinese, if that subsector becomes quite a large proportion of the overall EV purchases in China, then it could have quite an important impact for where you see demand for different battery materials ending up. So the real challenge with EVs is that there's so much uncertainty, firstly in the number of EVs that you're forecasting, secondly in the subcategories of the different EVs that are out there, and thirdly in the intensity of use of materials within those EVs themselves as well. Because not only is the battery capacity a factor, but also the different battery chemistry as well. And most people are aware that we're generally moving towards nickel-intensive lithium-ion batteries because of the scarcity of supply and also the higher price of cobalt. So people are trying, to the extent possible, to substitute that out or thrift it away so they're not using quite so much. And that's seeing change in the makeup of battery chemistries over time.
All right, so talking about batteries, let's talk about lithium. It's the first time we're speaking with you, so many of our investors want to know about your outlook for lithium in the next few years. Sure,
so I think there's been some, obviously the lithium market has, for most of the last 2.5 years, been on a really strong run in terms of pricing. As demand's been growing quickly, but supply hasn't quite been able to keep up. Just in the last, I'd say, couple of months, some of that heat has come out a little bit of the market, as has been a bit of market jitters with some fears of oversupply. I think quite a while back, I suppose, we saw the largest individual operation, the Greenbushes mine, owned by Talison, planning to double output. And that's, in 2015, that was half of the market. And so that individual project by itself is accounting for quite a lot of, several years of potential demand growth. and are likely, it's an incumbent producer at a relatively low cost, you would expect. But then obviously more recently, that's really sort of caused a lot of market fears, or a lot of sentiment, a lot of conversations, is the SQM announcement. They've resolved their issues with Corfo and been granted the potential expansion, which could amount to a very large amount of material. And again, it would be low cost, first quartile on the cost curve. And that's making people wonder, oh, well, actually, there's been a lot of excitement about a lot of junior miners getting to the space, but are they just going to get wiped out by the majors because they're able to expand output? And I think some of those oversupply fears are a little bit overblown, because it's important to remember that the SQM deal is not necessary. It's not a expansion that is guaranteed to happen. It's that their quota has been enlarged, and the rate at which they apportion out that new supply, I think you'd certainly expect them to expand. I think their capacity a year ago was about 48,000 tons of lithium carbonate equivalent. That's going up to sort of 60 and then 70 in sort of the immediate future. But expansion plans beyond that are not crystallized. There's nothing too firm and definite out there. So I think it would make sense from an SQM perspective for them to apportion out the supply in a way that does not cause the market keeps the market somewhat in balance, whilst probably discouraging to a certain extent some supply discipline, or encouraging supply discipline from other potential producers.
Right. So bottom line, should investors really worried about an oversupply in the market? Is that a no?
It's not a complete no. I think our market balance is that we're moving from a deficit into a sort of a fairly balanced situation through 2018, 2019, and that will keep prices relatively well elevated around where they are at the moment. But then maybe through the early 2020s, there will be enough supply coming in that it could cause a relatively small oversupply as a proportion of the market, not very large. But as that happens, we'll probably see prices come down a little bit. But it's important to remember that where they are today, virtually every producer is making fantastic margins at prices today, and that's not always going to be sustainable over time. And we see, as a lot of new supply starts to ramp up in the early 2020s, that prices could come down from, if they're sort of around $12,000, $13,000 a ton today, which in lithium is quite challenging because there's no great transparency on prices, but more to like maybe $9,000, $10,000 in the early 2020s, sort of normalizing around that kind of level as the market gets more balanced. But there's certainly a lot of uncertainty, and I think a key thing for investors and all market watchers to keep an eye on is announcements from the majors about their expansion plans, because that'll be key for maintaining a market balance and keeping prices at a reasonable level, and therefore people making it into the market and making money.
All right, and apart from those announcements, are there any other factors investors should watch out for in the lithium market this year that could impact the prices or the market itself?
Could impact prices, I'm not sure. The key one is certainly supply discipline, or the rate at which the majors are looking to expand their output, with SQM being the key focus on that. But with them, it's important to see there's beyond the sort of the planned expansions for the next year or so. There's a long lead time and a lot of capital expense in them expanding further. So it's not necessarily it would be very surprising to see them expand to their full potential capacity in a short space of time. Other areas to watch. We mentioned offline just beforehand, the FMC are potentially having, they're spinning off their lithium business. So, I mean, that presents investors with an additional pure play lithium option, which will be out there. I think the different strategies of the major producers is quite interesting. Some of them are looking to expand more, get more material into the market while prices are high and make margins that way. Others are not necessarily looking to go that way and are more focusing on being the best players in the highest end segments, making sure their material is the highest quality of battery grade material that everyone's looking to get hold of, or even further downstream products that are smaller, more niche segments, but again higher priced.
All right, and let's jump to a different battery metal.
Sure.
What's your outlook for cobalt?
So cobalt, obviously the price has rocketed, increased very sharply over the last couple of years, and then just in the last few months has gone up again. And that's been largely rapid demand growth, driven to a reason. I think all demand sectors for cobalt are growing pretty well, but the battery sector is obviously the most exciting and the key one that's growing quickly at the moment. And supply hasn't been able to keep up in previous years. Big deficits, large price increase. I think there's projects coming on stream the Katanga project in the DRC, and also ERG has a tailings product, both of which will potentially provide enough cobalt units to the market that will help it to balance out, but not to cause prices to crash. And I think, so we see the market being a little bit more balanced over the next few years as those projects ramp up to meet demand. But beyond that, the pipeline of new cobalt projects is pretty bare, and that could supply substantial amounts. And even with cobalt being some cobalt substitution out of lithium-ion battery chemistries, we still see demand in that segment growing pretty quickly, continuously throughout the next 10 years. So beyond that initial pipeline of projects, the cupboard is a little bit bare. So we could see, it's obviously difficult to tell. It's difficult to talk about supply changes more than a few years out, because projects could exist now and you don't quite know how they're going to work out. But yeah, it's entirely possible that we could move back into a substantial market deficit if we look sort of more than 5 or 6 years ahead as demand continues to grow. But a thing to keep an eye out on there are alternate. Well, there's two issues, I suppose. Firstly, that the supply of battery chemicals, so the supply of cobalt metal, is quite evenly distributed around the world, but of battery chemicals, of cobalt chemicals, of which batteries is one of the most important one, it's very heavily dominated by China. And for consumers of those cobalt chemicals outside of China, it's very difficult to trace where the original units came from. And obviously, given the concerns around some of the mining in the DRC, that proves a challenge for some consumers outside of China. So some of them are looking, or options for obtaining those chemicals outside of China are interesting to people, and there are various options that are out there. There are primary cobalt mines, which historically have only contributed a very, very small proportion of overall cobalt supply. The vast majority comes either from copper byproduct mining or as a byproduct of nickel mining. But at current pricing, and if prices are sustainable anywhere near the levels where they've been for the past couple of years, then those projects look a lot more viable than they have done in the sort of the more distant past. So that's one option, and I think another option that everyone's keeping their eyes open for is the increased uptake of and establishment of technology to do successfully battery recycling, because there will increasingly be a lot of batteries, lithium-ion batteries, reaching their end of their life, and there's a lot of valuable materials in there. And there are technologies out there to either melt down those batteries and try and recover the metals that way, or acid leach. But the scale on which that's really occurring is not at a point yet where it meaningfully contributes to the supply of cobalt, lithium, or nickel, really. But that will certainly develop over time, and it's got the technological aspect. It's potentially got you're likely to see end of life. I think there's a lot of regulations already in place for end of life lithium-ion batteries that the manufacturers or certain people will have to take responsibility for those. So they can't be landfilled, so that there will be an imperative on trying to recover the material from them, given that that's the main value.
Right, and I just wanted to touch on something you mentioned earlier, which is the change in chemistry in batteries.
Oh, sure.
So there are a lot of talks about increasing the nickel in those batteries. What is your outlook for that particular metal? Sure,
so we've moved from, lithium-ion batteries are a family of different battery chemistries, some of which in fact don't use, for example, cobalt at all. Quite popular in China is the lithium iron phosphate and LFP battery, which doesn't use cobalt, and is cheap, partly as a result of that, but provides a relatively low energy density, so if you've got it in an electric vehicle, your range will be smaller. Now those are being less favoured in China over time because subsidies are being rolled back on EVs, and they're predominantly affecting the shorter range vehicles. So we would expect, for example, in China, the LFP to diminish in popularity over time and be increasingly displaced by NMC batteries, which is nickel, manganese, cobalt. And historically, we've seen nickel, manganese, cobalt were in a sort of a 1-to-1 ratio to each other. But what is most popular now is the 5-to-3-to-2 or the 6-to-2-to-2. So 6 cobalts, 2 nickels, 2 manganeses, proportionally. The next big step, I think, for lithium-ion batteries is an 8-to-1-to-1, so substantially more nickel intensive than at the expense of cobalt and manganese. But it's cobalt's the key element that they want to thrift out. Now, my understanding is that 8-to-1-to-1 technology is not really viable at the moment, but we've got it factoring into the share of lithium-ion batteries over time, maybe starting in around 5 years' time, but still only apparent if you look maybe 15, 20 years ahead, still not accounting for a huge proportion of the overall lithium-ion batteries that are out there. But that's the big next step, and I think people who want to believe a bullish nickel battery story, I think, would want to be keeping an eye on those sorts of developments.
All right, and my final question for you, we have a lot of new investors watching us today. What do you think is some of the mistakes they should try to avoid when entering the battery metal space?
Sure, well I mean, for example, we were just talking about nickel just then. There's a lot of stories which give you a lot of reasons to be bullish about the metals in the space. But the crunch for nickel, should it occur, for battery-grade nickel sulfate access, is probably a longer-term story. So piling into the market now and expecting immediate returns is not necessarily how it's going to happen. It's definitely more of a long game, and the risk there is that technological advances or other supply exploration discoveries mean that potential crush is headed off at the pass and it fails to arise. So it's a real challenge, and a lot of the bullishness on battery metals is also founded on a bullish story for EVs, which I think EVs, there's absolutely no way they're not going to play a substantial part in the future of the world regionally. But I think some people because there's a lot of uncertainty, it's policy dependent, which is very hard to predict. I just think tentativeness is probably important, because it's easy to get a little bit overexcited about what's going on.
All right. Thank you so much for joining us today.
No problem.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today was Laugharne of CRU Group.